Yeah, it's Midas. Let's talk about the stock market crash that might be happening in 2026. This is how you can protect your money, and lessons are from the 2022 market crash. So this video, I'm touching on how to avoid holding the bag onto the bear market, where millions are made in the bear market, not the bull market. And this is why. So disclaimer, everything said in this video is only for educational purposes. Make sure to always do your own research. But this is why you should listen to Midas while I beat the S&P by 103x in less than a year. If you want the proof, check it out on my link in bio. Show you all my total gains and all my picks, which is over 5,000%. If you want to take a look at all my stock picks, check it out on my link in bio. But let's not get to the video. So there's a possible stock market crash in 2026 that I predict, and this is how you can prepare. So these are the historical context and warning signs to watch out for. Whether it's rising inflation and persistent interest rate hikes, overvalued tech and growth stocks similar to 2022, market volatility indexes spiking like VIX, geopolitical tension impacting global markets, and signals from leading economic indicators slowing GDP and rising unemployment forecast. So you might be seeing these posts back in 2022. Let's talk about how we can learn from this 2022 bear market where the S&P was down nearly 25%, the Nasdaq crashed over 35%, and inflation was out of control. The Fed was hiking rates aggressively, and it felt like a deep recession was inevitable. So let's first talk about what caused this 2022 bear market. Well, first, we had the Federal Reserve raising interest rates aggressively to fight inflation. Tech-heavy Nasdaq took the hardest hit due to high valuations. Investor sentiment turned extremely negative, where panic selling occurred. Supply chain issues and energy price spikes added pressure, and with a lesson of macroeconomic conditions can trigger rapid declines across sectors. Now, this is how you compare your portfolio in case of a crash. Diversify across sectors and asset classes where stocks, bonds, cash, commodities. Move parts of your portfolio to defensive sectors with utilities, consumer staples, healthcare, and avoid overexposure to high risk technology or speculative stocks. Maintain cash reserve to capitalize on future buying opportunities and rebalance your portfolio regularly to reduce risk. You also need to look for those opportunities during this bear market crash. So look for high quality companies with strong balance sheets trading at discounts. Dollar cost averaging is key. Buy consistently instead of trying to time the market. Consider alternative investments like gold, silver, or crypto hedges. Dividend paying stocks can provide passive income while waiting for recovery. And take a long term perspective. Remember that bear markets are temporary, but opportunities like this are also very rare. So risk management and mental preparedness is very key. So set those stop losses or alerts to prevent emotional trading. Avoid panic selling during short-term drops. Focus on your long-term investment plan. Do not chase headlines. Prepare mentally. Volatility is part of investing, not a signal to give up. Keep a checklist for decisions. Is this reaction rational or emotional when you're reacting to the market? Now, let's look at the lessons from 2022 and how we can apply that for 2026. So, patience pays. The market recovered after 2022 sell-offs. High quality companies outperform during recovery phases. Don't blindly follow hype. 2022 showed the danger of chasing hot stocks. And understanding macro conditions can help anticipate the risk and opportunity. Bear markets are normal. They test portfolios, but also create buying opportunities. And this is how you can prepare for this crash, review and rebalance your portfolio now before a crash, increase cash reserves to seize opportunities, make sure have lots of cash on liquid, avoid over leveraging or high risk trades, educate yourself on sectors that perform well in downturns, stay disciplined, focused, and ready to act when opportunities arise. So bear markets offer discounted prices on high quality stocks, creating a huge upside when the market recovers. This is why millions are made in the bear market and not during the bull market. Because panic selling causes temporary opportunities that smart investors capitalize on. This is why I tell you guys to never try to panic sell, but always just leave your money in. It'll eventually recover. So, for example, tech and growth stocks in 2022 dropped 30 to 50%, then recovered, and early buyers made millions. Like, for example, Tesla was at $100, Meta was at $80, now it's at $700. Dividends, cash flow, and reinvestment strategies work better in downturns. So bull markets feel safer, but gains are slower and competition is higher. So most opportunities are already priced in. Keep that in mind. But yeah, you have any questions about, you know, the bull market and the market crash, give me a comment below and I'll respond when I can. If you want a real-time stock and crypto calls, access to my full portfolio, become financially free, and join a community of hungry degens, join in my link in bio. That is for my exclusive Discord called the Midas Circle. And if you enjoyed the video, subscribe and like for more. That's all I got for today. I'll catch you guys in the next video. Peace.